Hey everybody, Lawrence here. Got my happy shirt on today. Just give me a thumbs up in the chat if you can hear me, because sometimes one never knows whether these technical things are working correctly or not. Perfect. Just going to wait a couple of minutes. Thank you to everybody that is, excuse me, I don't have the coronavirus, allergies. Oh, that's not a joke. But yeah, so obviously some very challenging times at the moment with what's going on in the economic world. Somewhat exciting if you work in finance, and obviously there's the downside of the impacts of what's going on right now, which are glaringly obvious. But sometimes these things can bring communities together and also make companies a little bit more robust. So there are some positive things that are going to come of this financial crisis. But we're here to talk today about what's going on with the peer-to-peer lending world and what I think about what's going on, what the future holds, which I'm sure a lot of you that have money invested in peer-to-peer lending are sort of worrying, well, what now? To be honest, we've had this amazing bull run of economic prosperity for the last 10 years, and it was just inevitably a matter of time before there was going to be an economic situation which would really put alternative finance companies to the test, place to put your money in, which are not. This is really a sort of a perfect storm of finance issues, especially within the UK. You've got the Brexit situation that was sort of brewing in the background. Then we have the coronavirus. Obviously, if we look short term, let's look at the scenario. Short term, if the virus sort of gets under control, sort of like the SARS virus did, then I don't think the economic impact is going to be as severe. I'm sure it will have a severe economic impact even short term. Obviously, businesses are closed. It's going to affect small, medium enterprise businesses, also the large ones. You look at the travel industry right now. I checked this morning, British Airways, I think they call it International Alliance Air Group, is down 70% from February, and Shell down 50% over the last month. So obviously there's these large economic impacts, especially on the share prices. But if this virus is short term, these economic impacts will be short term. If it's longer term, then obviously more issues will happen. We really don't know right now. What we can look at is sort of what's going on in China. They've got a really good handle on what's going on with the virus. If they're reporting honestly, which is always questionable, there are new cases. I think today we're 85 new reported cases over, from 80,000 cases. So they seem to have a good hold of the control of what's going on with the virus, which goes just to say that it can be contained. So that is some good news. As far as peer-to-peer lending goes, what I think you're going to see now is these freezes with the peer-to-peer companies. You've seen it with Assets Capital, Growth Street, and today Octopus Choice freezing with the withdrawals. Octopus Choice also freezing new investments, which is interesting. I think that most peer-to-peer companies would follow suit with that if it was to protect their businesses from failing. That would be something that I would personally want to see. I don't want to see a huge run on these financial companies, everybody running for the exit doors, and the companies failing, because if you've been invested in Lendy or Funding Secure or collateral, you're going to know that administration is probably one of the last things you want to see as a peer-to-peer lending investor. These administrations are very expensive. They're drawn out. The valuations of the properties which are being recovered can be extremely swingy. Administration is by far the last thing you want to see. So if people like Assets Capital and Growth Street are having to put a freeze on withdrawals, I have no problem with it. I think it's a good move for them, and I would expect other ones to do it also. You're going to see rate setter liquidity is going to slow down if you're trying to exit. I know I put in a sell order for a small amount just to test it about 5 days ago, and I'm still waiting, and that was the access account. I expect that to draw out. So obviously a demand and supply situation. When there is more demand to exit than supply, there's got to be people to buy the loans that you're trying to sell out of, and if there is none, then the exit is going to take longer. And also remember, if you're in peer-to-peer lending, there was never a guarantee that you'd be able to exit. Every single company has disclaimers about that. So just don't be surprised if you start to see more companies doing that. I'm getting a lot of emails asking me, does that mean that the peer-to-peer companies are in financial trouble? To be honest, I mean, nobody really knows that, only those companies. But I don't necessarily see that as a reason for them to be troubled. There are some companies that I think are more susceptible to failing. It's like Funding Circle. You got this heavy weight on these SME loans, small and medium enterprise loans, which these companies are going to get hit the hardest if this virus, even if it lasts 60 days. No customers are buying things from these companies, especially service-based restaurants, bars. You're going to see them get hard, which would in turn mean that Funding Circle would obviously take a hit. And you've seen some layoffs already happening with them, and then the share price is absolutely volatile. I think it was up 46% today, but it's tanked all the way down to the very low numbers from where it was when it was released. If you looked at my review, I said several months ago that Funding Circle is a company that I was exiting from. Obviously, I had no idea about this virus and how it would affect, but you are starting to see some of the flaws with Funding Circle's business model. It's just a huge company. They have a lot of expenses to float through these downturns. Two, if you have any questions, pop them in the chat. I will do my best to answer. I don't pretend to know everything about what's going on in the industries, but I have some information that I can share with you of what's going on. So what am I investing in right now? That's a good question. As far as peer-to-peer goes, I'm not putting anything more into peer-to-peer at the moment. Good question, Nick. I'm withdrawing interest in capital payments. The reason for that is I do believe that the peer-to-peer lending industry has legs. I'm not concerned about a collapse. What I don't believe in is taking any unnecessary risks when you don't have to. Is it really worth risking investing in peer-to-peer when when you have, the ability to get returns of 5 or 6%, the upside is considerably lower than what the downside is at the moment if this virus does happen for a long time. What I'm not a big fan of is, like I said, making a run for the exits. I think, this is harmful for financial companies in general. And, I want to see these peer-to-peer companies survive long term. So I had already been sort of transitioning into the lower risk of peer-to-peer over the last 4 months or 5 months. The companies I think are going to be fine are the ones that are well-funded and well-capitalized. You have companies like Octopus Choice, which is funded by Octopus, they have a good weight in the healthcare and energy businesses. So if Octopus funds Octopus Choice, that's a pretty good place, for you to be. I wouldn't say none of these are recommendations. These are just opinions. Like I said, I'm not investing any further into peer-to-peer, but I'm also not mass exiting because I do believe many of these companies are going to be fine, especially if this is short term. I still have investments in LoanPad. I did speak to LoanPad this morning. What I like about LoanPad is they have very low expenses, so they can ride out these economic challenges, and their loans are very sensible to begin with. So I do think this coronavirus is going to be short term, so I'm not too worried about LoanPad. Again, just an opinion. Rate Setter, I'm not so concerned about them, but I do worry about, for me, it's always risk reward. The interest rates have fallen so much with them. I'd already started to kind of pull back. I just 3.5% with Rate Setter doesn't do anything for me. Do I think they're going to have financial issues? I honestly don't know. I don't know what's going on behind their financial doors, as I don't with a lot of companies. So I think those companies will be okay. I think you're going to see, again, a lot of freeze of withdrawals through many peer-to-peer companies, and don't be too concerned about that. Again, it's to protect their businesses. If it is a short-term situation with the virus, people are going to need to borrow money, even if it's just 30 to 60 days. Now, there's obviously going to be a risk of default in some cases. I mean, obviously, a risk of default is always prevalent in peer-to-peer lending. And now when you have an economic crisis, what's going to be the first to go? Probably, consumer lending payments. But in the same token, they are going to become probably very popular. What you're going to see is how good the quality of the previous loans that were written really are through economic crisis. If people can continue to make payments, obviously the loans that people like RateSetter wrote were good. Now, if you see a bunch of defaults happening and the defaults start to skyrocket, you wonder what were the real quality of the consumer lending loans that were written. So only time is going to tell what the quality of those loans were like. So what I'm doing right now, again, is just sort of sit crisis until things are settled, till we know what we're looking at with this health crisis. Then there's no point in taking any unnecessary risks in that respect. Just going to go through some of these questions. Nick, I kind of already covered peer-to-peer, what I'm investing in. I'll talk about the stock market. What has worried you most about recent events in the peer-to-peer sector? I mean, it's like anything. If your lending dries up, it's sort of this knock-on effect. If you don't have investors' money to lend out, then you can't make new loans. That's a problem for the peer-to-peer companies, is how they make revenue. And then obviously defaults are a problem. So, but this is this is the problem with every company that's happening, not just in peer-to-peer. That look at the airlines; they don't have people traveling. They are going to have real economic problems. The restaurants don't have people eating. They can't pay their staff. Those staff now get laid off. They can't make their mortgage payments. You just have all of these knock-on effects, and I think you're just going to see that through peer-to-peer. Am I worried about peer-to-peer defaults? Yeah, of course. Hopefully this is a short-term virus problem and the defaults may rise. I'm sure you'll see them rise. It's inevitable. So yeah, I'm worried about it, of course. Would I consider RateSetter the safest peer-to-peer? No, I would not. The safest is a tough call, because I think that any of these peer-to-peer companies are susceptible to failure. So, one I would consider a little bit safer than another. RateSetter, I don't know that's any safer than, some of the other low interest rate loans. You know what I dislike about RateSetter is some of their loans that they charge to, interest rates to their borrowers are very high. You may be getting 4%, but somebody on the back end may be paying 25%. So that's obviously a high risk loan. There's some pretty big spreads in RateSetter. If you are invested through them, you can go in your loan book and look at the loan documents and see how much your borrowers on your loan notes are paying. So we're going to see over the next few weeks what happens with that and how RateSetter really fares through these economic times. And we'll see if they're stable enough to ride it through. I hope they are. Will I be buying stocks as usual? Yes, absolutely I will. But I have not been buying stocks. I've always written on my website that I do not buy individual stocks, because the reason why is if you were to have bought British Airways or Shell over the last 6 weeks or 7 weeks, you'd probably be feeling pretty sick right now that the stock prices have plummeted. And there's always this emotional tie that goes to stocks. If you own an individual stock, say you own the International Airways conglomerate group, which has British Airways and Aer Lingus, you bought it in January of 2020 when it was 70% higher, you'd be looking at it now feeling pretty sick. And what a lot of people do when they're dealing with individual shares in their portfolio is they sell out at the wrong time and they buy in at the wrong time. So they buy when things are high and they sell when things are low because they panic. that's the problem that I see with the emotional ties that go into individual share investing. So this is why I've always purchased index trackers. I bought more when the Dow was 23,000, when it was 22,000, when it was 21,000. I kept buying. What I think is a good strategy right now, again, disclaimer, not financial advice, just from my experience, and I do have friends that are in the business of managing hedge funds and things like that. And I think cash is a good place to be sitting right now. If you have a trading account, have some cash ready to go. I think the stock market has a lot more room to fall. But if you saw my email that I sent out recently about the historical recoveries of the stock market over the last 100 years, it always has recovered. It likely always will. So I think if you can invest money under your mattress in shares right now, I do still always go for index trackers, particularly the US market. I think is going to be okay long term. Not concerned about it. I would definitely think this could be a buying opportunity in the stock market once in a decade. We're already Dow's down about. This is the time, if you do have cash, to really consider getting in. I'm not worried about recovery at all, unless this virus just lingers for a year or 2 years, and obviously that would change everything. And I am presuming that the virus will be a short-term problem. So let me see here. 7-1100. The effects of the virus have been blown out of proportion. However, the effects on the global economy will be devastating. I expect tens of thousands to have lost their job within 90 days. Yeah, I think you can see it now. It's already happening. I don't know that the effects of the virus have been blown out of proportion. If you imagine that people who are not only older but younger, in their 40s and 30s, are having this breathing issue, because it is it does go down into the lungs. And I don't know that we really know how out of proportion it is until I don't know anybody that's personally contracted this virus. I have heard some people haven't gotten severe symptoms and others have, but I don't know if it's been blown out of proportion. I think the effects of people being quarantined and staying at home will have a devastating effect in the economy. Neil, do you deal in individual stocks? I do not, Neil. I'm an index tracker guy. I don't like the volatility of buying individual stocks, but I could definitely see why people would be buying them at this point. You could take a gamble on the airlines if you wanted. No telling if they will survive. If 2 or 3 months of no travel will probably put some airlines out of business. So I don't really do individual stocks, never have. Except for Apple. Apple is the only individual stock that I've ever bought. I bought it when it was $99, and with the plan of keeping it until I was an old man. And the reason is, every time I go into a shopping center in Europe, anywhere in the world that I've been, the Apple store has always been full of people. Go to the Microsoft or the Samsung store, never like that. So again, but I think it's very risky to buy a portfolio of individual shares. Hey, Martin, Rate Setter says they will have a provision fund. Could this be, they'll still say they have a provision fund. Could this be their saving grace? It could be. But if the fund gets run through quickly, then I don't think that will make any difference to them. Again, it depends how long this economic slowdown happens for. Yes, let's see. Do you think people already in the Rate Setter execute could be prevented from exiting, or just new requests? That's from Richard. Absolutely. I think there could be a freeze on exits at any time. Bordell, do you think the stock market crashed purely down to the virus, or will there still be problems after the virus is overcome? Yeah, I mean, look, before this virus happened, there was already economic issues with printing money. You got all this debt that's still being ignored, and now what we're going to see is more debt being piled on top of the already existing debt. But the offsetting factor was the economy was strong. Companies were making money, the unemployment was low, interest rates were manageable. So there could be a long existing issue with the stock market, but I don't know. That's hard to tell. We don't know what the governments are doing with all this bailout right now, and it's going to be hard to tell. I think your guess is as good as mine with that. I have no idea. Brian, can the stock market cope with the financial and weather health crises that seem to be happening every few years? Yeah, I think the stock market will cope. It always has. So if we go for history, yes, it will cope, and it'll be a decent place to put your money if you buy it at the right time. Oh, incidentally, trying to buy in the low point is next to impossible. So if you're trying to time it, you may get lucky. How are you going to know where the low point is? Nobody knows. Yes, James, thank you for the compliment on my shirt. I appreciate it. Question about your investment holdings is general. Will you be balancing your portfolio 10% P2P, 40% property, 30% equity, 20% bond? So that's a great question. I do not have much invested in property, but I do have a good proportion of trackers and bond trackers. I hope you can still hear me. My connection went a little funny. What I will do is move some of the money from the bond tracker into the equity tracker once the market starts to stabilize and once we know what's going on with the virus, because I've always held bond trackers as a hedge for a stock market correction, because if you do own a bond tracker right now, you're going to see that your bond trackers have not declined too much. They've been pretty stable, and you can use that as a sort of an insurance hedge to move into equity trackers when the markets are very low. So that's probably the rebalancing I'll do. The peer-to-peer situation, I think I have about 12% in peer-to-peer right now, and I think the exiting possibilities now are going to be very non-existent, so rebalancing will be hard. That's sort of a hang in there and wait and see situation, but I will rebalance from bond trackers into equity trackers, and I will definitely be buying more equity trackers. And another thing that I'll be doing is probably in the next 2 to 3 months, the companies that have survived this financial crisis in the peer-to-peer sector, I'll be definitely looking more closely at them, because I've always wanted to see what would happen during a time of economic difficulty. And it's going to be interesting to see which ones are robust. And I probably would trust them more after they've been able to weather this storm. ES says, how to time buying stocks again when they're transferring from a cash ISA. ES, just have your money ready to go. I think you can sacrifice some of the upside by being cautious and not trying to time the market. Look at the news. Look at what's going on with the markets. Now is more of a gambling time with the markets. I'm not a gambling man. I don't like the risk. So if you sort of wait and see where things go stability-wise, it would be better. Even if, say, you're expecting 100% upside by buying into the markets at a certain time, I'd personally rather take 50% of an upside with knowing that my risk had been lowered, that I didn't screw up the timing. So I would have the cash ready to go and be ready to strike when the news starts to settle down and we can see some light at the end of the tunnel. Malacca, 1951, how are our peer-to-peer companies managing to work from home? I think most of them probably are, because they're very online and phone-based businesses. So, you've got a lot of people working from home in technology now. It's not a problem. Amen, Ferda. Mr. Raw Monkey, any views on managed multi-asset income funds, particularly bond-heavy funds that are meant to be low risk? I cannot stand managed funds. Probably know if you've read my website. Now you're talking about bond funds. I don't think there are any particularly advantages of any type of managed fund, and here's the reason why. I read an article today. It was interesting in Bloomberg about hedge funds, and 2019 they had the top 5 hedge fund managers who had been paid over $1 billion in salary for the year. I said $1 billion. 1 billion. Can you get your head around that? $1 billion salary. So out of the 5 hedge fund managers that have been paid $1 billion or more, 3 of them had underperformed the S&P 500 by 10% or more. So the S&P had gained 29%. Some of those hedge funds were up 11%. I think one of them was 41, but the other ones were the three underperforming ones were 14, 18, and 19%. This is why I don't like managed unit trusts or mutual funds. If these hedge fund managers who are being paid $1 billion of salary a year cannot get it right, what luck do the mutual fund or unit trust managers have? Very much a shot in a barrel. And I bet if you look at your managed unit trust right now, they probably have taken such a beating that this is why I've always said index trackers, passive, low fees, own the entire broad market. I will always invest that way till the day that I die. I think it's a smart way to go. Bond funds, same. I don't think you need to invest in a managed bond fund. That's me personally. That's my opinion. I just buy index bond funds just as a hedge against market corrections like what we're saying now. Richard Weber, anyway, here's why the price of gold has dropped too. Only this is a safe haven because gold is as risky as buying equities. Go look at the volatility in the gold market over the years and the decades. It's up and down like anything. Gold is not a safe haven. And also, if you think about this right now, if you owned a crate full of gold and you needed some food, likely your food is going to be more important. You may not be able to trade that gold for food because people need the food. They don't need the gold. That's it. So that's when all of the poop hits the fan. People need resources like food. That would be, I know that sounds a little bit convoluted, but I just don't think gold is the safe haven that people have always advertised it to be. You're going to see that now. Ma'am, I took your advice and bought some more shares in the SP index. The share price was low now, but this doesn't look like a good move. Yeah, ma'am. So I've always written this. Index trackers are for long-term investments. If you are anything under 5 years in length of time, you should not be buying index trackers. They are long-term investments. People who trade shares and try to day trade, those are the people that you're going to see might have some luck in this volatility. But I will tell you this, the only time you lose money in shares or in index trackers when you sell it. Just hang on to it. It will rebound. Historically, it always has. May take some time, but if you have cash right now, it's a good time to be buying in again. And it's a good point about market timing. You just can never get it right about timing. I've purchased hot through the highs and lows always. I've never sold anything. And every time I sold when the Dow was 15,000, part of my portfolio, because a hedge fund manager told me it was the right thing to do. And I watched for 6 months as the markets continued to rise. And that was back in 2016. Learned a very valuable lesson about market timing. And there are some very lucky individuals that probably sold out at the beginning of the year and just got lucky because nobody knew this virus was going to have this effect. But in general, market timing, extremely difficult, very hard to execute. So, ma'am, just hang in there. Don't sell anything. That's my strategy. Bill Basil Hamster, what is the interest in the peer-to-peer company chasing default? Is it easier to let them fail and move on to new customers? No, they're always going to chase defaults. They have to. They're obligated to. They have a team that usually does that. Ma'am, should we hold on to our peer-to-peer investments? That's I don't think you can exit now if you want to. I explained earlier I'm not putting any new money into peer-to-peer, but I think that the robust peer-to-peer companies will be able to survive if the virus is short-lived, which I'm hoping it will be. I don't think there's any point in taking any unnecessary risks within peer-to-peer right now. I'm certainly not investing in any new companies that I was planning on. I will sit on the sidelines. It's a wait and see. That's your call. There are companies that I think are going to be okay through this, but time will tell. David says, any comments about the Funding Secure saga? There's a lot of criticism about the administrators. Yeah, it's been happening with Funding Secure and with Lendy, the way that they're handling things. Administrators always do things that don't make any sense. This has always been like that with administrators. It's no different. What you're seeing, though, is the big problem with Funding Secure is some of the valuations that they've been given have been incorrect. And unfortunately, it's part of the risk of any investment. You put money into peer-to-peer lending, there is risk involved. Look at your stock market right now. If you look at your portfolio, your capital has been reduced by probably 20 to 40%. It's no different. There's investment risk with everything. So unfortunately, Funding Secure is one of the companies not done well. And the administrators could handle things better. And I'm hoping there'll be some kind of legal action to just not against the administrators, but just to protect the investors' interest. Just like if you, by the way, are an investor through Lendy, I highly suggest that you join the Lendy Action Group, which is, you can search on Facebook. They have raised money for a legal fund to be protected as investors. I do have money in Funding Secure and Lendy, so we'll see what happens with that. James, you're welcome. What bond fund do you use to hedge your equity portfolio? I use the Vanguard Global Bond Tracker. That's the only one that I buy. You can find that on Vanguard UK's website. Malaka Martin, does your mom still have premium? Yeah, no, I made her get rid of all of those premium bonds. I think I'd rather be in cash. They don't return anything worth bothering about unless you get extremely lucky. The odds are terrible to hit some kind of a big payment. I would say if anywhere is nice and secure, it'd be cash. It wouldn't be premium bonds. I would never buy premium bonds. What point did you see current financial conditions as a significant event? Dale, I admit I got it a little bit wrong. I should have paid more attention when I started to see the problems early in China. I have a friend who works for a financial hedge fund, and he said this is going to be an issue. And I thought that China would get this thing contained. It just spread so fast, and it was so fast moving. I would say probably a week and a half ago was when I saw it was going to be a significant event. I wish I could say 4 weeks ago, or 6 weeks ago, but no, I didn't see it was going to be this impactful. Annabelle, do I detect some reservations about rate setter from the session recent emails? It's always been one of my 6. Yes, Annabelle, reservations are more down to the low rates that they pay more than anything. 4%, 3%, 3.5% does not excite me with rate setter at the moment. And especially since some of the rates that the lenders are paying are pretty high. There are other companies that I think are a safer bet right now. But do I think rate setter is going to fold? I hope not. I don't think so, but anything is possible. I have money invested through rate setter still, so I'm exiting as far as taking out interest and capital payments, but I'm not selling out. So, Bordale, have you shifted any of your money out of peer-to-peer lending because of the risk of a run on a company? Yep, I have. Bordale, I got very lucky timing-wise, so I exited out of Growth Street. By the way, Growth Street used to be on my top 5. I became concerned with them when the CEO changed, and then they had 2 issues with 2 credit lines that were very big. So I decided that it was probably a time to move out of them. I don't know if they're necessarily in financial trouble, but I also had places that I thought I pulled out. It was kind of good timing, but it wasn't. It was time because I pulled the money out to move to a different new peer-to-peer lending company, and it just happened to work that they had that freeze right after. So, but yeah, I was a little bit on the fence about Growth Street. Have I shifted any of my other money out? I think more not shifted, but I've been taking capital interest payments out of most of the peer-to-peer lending companies now rather than reinvesting. I don't think that's a bad thing to do. Do I think the Bank of England governor is a good choice? No, I don't. That's my short answer. I don't think it's a good choice, but politics is politics. I have no control over that, so I try not to put too much weight and thought into it. His track record at the FCA wasn't good, yeah. Ian Neil asks, runs on peer-to-peer companies is a bit like panic buying in supermarkets, hence why companies are moving to queuing. That is exactly right. Dominic, how safe do I think assets capital is? I think SMEs are going to get hit hard if this virus is long-standing. What I personally think is the virus won't be a long-standing issue, so I think assets will be okay. But again, right now, and we'll see what happens. I wish I had access to their finances and their books and their bank accounts, but unfortunately, they will not give me their login information. So I have asked for it. Martin asks, when you visit the peer-to-peer offices in London, how do you get treated by their staff? Yeah, good. Most of the time, pretty good. I just came back from a trip, by the way. In January, I went to several peer-to-peer companies, LoanPad, Blend Network. I can't remember who I saw. I'll be writing about it soon, but those 6 companies. I went to Cufflink, and things were very different back then. I had some really positive meetings, but things have obviously changed since then. And by the way, my reviews, I will be changing them to reflect what's going on. But yeah, generally the companies treat me well. Basil, peer-to-peer companies may be obligated to chase borrowers who default. There's a loss. Is the investor's loss? It's hard to see why they would spend money chasing too hard. The investor loss is not the peer-to-peer company. Well, yeah, but Basil, they have an obligation. I mean, if they don't have good recovery rates, and this is going to be a bad mark on them for the future people who are investing. So it's in their best interest to have good recovery rates. Some companies have pretty bad recovery rates, and when I see that they do, I tend to steer clear of investing with them because I want to know that the peer-to-peer company is going to chase the people who are defaulting. I think they have an obligation to do that. So I don't think that they just give up unless they see that there's just no way they're going to get that money back, and the resources spent trying to recover money that's non-recoverable is not worth them doing that. So thoughts on property development loans and assets capital. Again, property, if it's a short-term virus, will probably have a short-term hit. I mean, think about the knock-on effects, right? People who don't have a lot of cash reserve, they get laid off. They're probably not going to be able to pay their mortgages. And then the last thing people are doing right now is out trying to look for houses to buy. We also don't know what's going to happen to the price of property. But if people are not buying properties, and obviously developers not selling properties, and there's this big knock-on effect, development loans are going to get hit short-term, obviously. But if the virus is a short-term thing, then that should run through pretty quickly, and it would be okay. Do I think we're heading towards a 1929 style Great Depression? I think we're heading into a recession. I think this virus could put us into a recession. I don't think we're heading into a Great Depression. I think, now we have technology. We have a pretty amazing healthcare, biotech companies out there that will be able to come up with a virus vaccine. So I think this is a good wake-up call, though, for how countries are prepared for health issues that really put a damper on the economy. So countries hopefully will be more prepared. And obviously, healthcare companies are going to do really well over the next couple of months. People that make ventilators, hospitals, hospital equipment. Amazon, I think, is going to do really well. UPS, FedEx, delivery companies, the mail services. Let's see, Dominic, do you think peer-to-peer companies will offer repayment holidays due to the virus? Yeah, I do actually. I think that's going to happen. It would be smart. It's better to offer some kind of relief if people are in trouble than not to. I've seen it within commercial properties already. I know people that own commercial properties, and they've had emails from some national companies that are asking for payment holiday for their retail stores. So I definitely see it happening within peer-to-peer. I wouldn't be too concerned about interest collection right now. If I was a peer-to-peer investor, I'm looking for capital preservation. I don't care if I get zero interest over the next couple of months or 3 months. I want to see capital preservation, capital return. Ma'am, I see you covered Capital Rise. You seem quite confident with their operations. Have you considered looking to British Pearl and Brick Lane? Yeah. Right now, everything has changed, man. So the confidence that I had in certain companies a month or 6 weeks ago will obviously not be as strong now. British Pearl, no, not looking further into them. Brick Lane, no, I'm not looking further into them. David, what are your thoughts on Unbolted in this current climate? Unbolted might actually be one of the companies that does really well because people are going to need to borrow money, and they can take things like gold, jewelry, precious metals as collateral, and which are easily sellable. The problem they face is gold prices dropping. They buy something when gold is $1,000 and they give money based on that, and then gold drops. They have a loan to value issue, but it could be a place to put money. Again, I'm not really looking for interest opportunities at the moment. I'm looking at capital preservation, so I'm not willing to take any unnecessary risks in companies right now. I'm just sitting on the sidelines. What are your thoughts on the new chancellor? Martin, rather not get into politics. I'm not a big fan of politicians, so it's not my bag. Andy, lenders seem to get paid their fees before lenders get their money back. Therefore, no incentive to keep things going when it gets tough. Do other peer-to-peer companies have similar contracts? And if so, which ones? Not that I know of. They had a terms and conditions. What Andy's talking about is Landy had a thing called a waterfall clause inside their terms and conditions, which, by the way, was added. It wasn't always like that. But what that meant is if they had a credit issue or the company went into administration, that lending would be paid before investors, which is why the Lending Action Group were looking for legal representation to challenge that, which I think is a good move. It's a crap clause that should never be in any of the terms and conditions of a peer-to-peer company. And unless you know of otherwise, I've not heard of a company that has such a waterfall condition. And the problem is these terms and conditions are so long that people don't go through them with a fine-tooth comb, and they can be added to and changed at any time. So it's very hard to keep up on it. Unfortunately, Lendy did some things that were not good. And it's a really black mark on what, for the most part, alternative finance is a good sector. So it's a shame. Please, if you can do me a favor right now, just hit the thumbs up on this video. Give me a like, as it helps me out with the YouTube algorithm if you're enjoying this video. If you hate it, tell me so. I'm open to critical feedback, as always. Let's see here. David, LoanPad seem to be quietly doing well. I've been impressed by the low lending multiples. Do you have funds with them? Yes, I do have funds with LoanPad. They are currently one of my favorite peer-to-peer lending companies. I had a chat with Louis Schwartz, who's the CEO, this morning to sort of see where they are with what's going on. And what I like about them is they have low running expenses. They have a small operation and they don't underwrite their own loans. By the way, in January was able to go visit LoanPad's lending source, Hemp Capital. I had an hour-long meeting with them, and I was extremely impressed with their caring towards investors' money. They have a great relationship with LoanPad. What I love about Hemp, who is LoanPad's single source of lending right now, is Hemp has millions and millions of pounds of their own money that they lend out. So they really have a lot of skin in the game. That's highly important. That's one thing I love about LoanPad. They do have money in them. I did withdraw some money because I needed it for other purposes, but I've always kept the balance with LoanPad. I think they are going to be a solid choice. There's never any guarantees in life, but LoanPad is definitely one of my favorites right now. They are number one on my top 5 list of lending companies. Also, Octopus Choice, by the way, if you don't know, has increased their returns from 4% to 5% in the freeze. So if you're with your Octopus Choice right now, you cannot withdraw money, you cannot invest further, but they have increased their return target rates. And also, Octopus has 13 million pounds of their own money invested in their loans, so they have skin in the game. I love companies that have skin in the game. They're investing right alongside with you. That says they have faith in their loans, as does Cufflink. Hoping Cufflink will be okay. I have a good relationship with them. So yeah, thumbs up for LoanPad. What do I think about the money thing wind down? Do you think they will comply and return money to lenders, especially in the current climate? Yeah, I think they will if they can. I think that they're susceptible to having loan issues like Lendy and Funding Secure was, because they're in high interest, high risk, high reward loans that are the first ones that are going to have issues. If you're invested in high risk, high return, you're in those 10, 12% range loans and companies, you expect those are going to be the first ones that are going to run into trouble. It's always the case. Those are risky loans. You don't get 12% returns without taking risk. So do I think money can run into problems? Absolutely. Absolutely. I don't know for sure, but hoping they won't. I think Ed, who runs the company, has good morals and he wants to return the money. So we'll see what happens. But I've never had a conversation with Ed. I've never visited MoneyThing. They've always been a little bit distant from me. So I don't have any inside information. With a 0.1% interest rate, would you see this as an opportunity for peer-to-peer to secure new investment post-virus? Absolutely. Yeah, 100%. I think once this is all passed, peer-to-peer is going to be a great place to stash some cash because savings rate is going to be very low. It's just going to be hard. Andy, you're welcome. Could you alert? Thanks for explaining about the Lendy waterfall clause. I hadn't realized it was added later. There is no chance of lenders keeping track of such things. Could you alert us of when this happens via financialthing? Yeah, I always try to. It's just hard. I'm a one-man operation with this website, and trying to keep all the information together and up to date is difficult. But when I do spot things that are not right, I do add them to the reviews, or I send out an email. So I'll definitely keep you updated if I hear anything that happens that will be negative towards your investments. Why are the interest rates in European peer-to-peer so much higher than those in the UK? Well, because the borrowers are paying much higher rates for their loans over there. So the EU peer-to-peers are charging more and they're paying more. And a problem with those EU peer-to-peer companies is I think they're inherently risky. I personally won't invest in any of them. You've seen what's happened in some of the peer-to-peer European companies recently that folded before this hit. I was quite thankful. I have a little bit of money with Mintos that's winding down just because the loans are just maturing, but I would not expect to put anything more into any European peer-to-peer companies. They are not regulated in some cases, and if any of them go under, you're going to have a very difficult time getting your capital back. So not a big fan, but there may be good ones out there. I'm not sure yet about Euro peer-to-peers. We'll see. Do I expect new peer-to-peer property development loans to be few in number in the near future, but the rates will need to be higher in, say, 3 months to attract investors? I think you're going to see things go through a washout period. Again, depends on how long the virus is here for. This thing is gone in a month, and these companies are able to keep their defaults manageable. I don't think the developments will come to a halt. This is not 2008. This is not a housing crisis or a financial crisis due to mortgage-backed securities. It is a panic situation. If you go to the supermarket, you're going to see that there is no toilet paper right now. Why? Because people are panicking now. No, not to be crude or anything, but if you need to go to the bathroom and you don't have toilet paper, you can hop in the shower and wipe your bum, right? So that just goes to show why this is a panic situation. People panic unnecessarily, and I think this is a panic situation that will hopefully wash through pretty quickly. I don't expect development lending to come to a screaming halt, but I think it will take a couple of months to wash out. And rates, I don't know about what will happen to rates. I guess that depends on whether the peer-to-peer companies need to attract more money. Then, yeah, obviously offering high rates will be more attractive than lower. You may see things like cashback offers being given to new investors to attract them. I wouldn't be surprised to see that. Cashback offers, by the way, a good way to increase your returns for a year, because if you get £100 on £1,000, then you're getting a 10% boost right there from the get-go. European peer-to-peer, what are your thoughts on Investly? I've always had good experiences with them. Yeah, I don't know anything about Investly sniffles. I hope you don't have the sniffles. That would be bad right now. But I don't have any good or bad thoughts about them. In fact, it's just more of a risk tolerance situation for me with Europeans. If you live in Europe, by all means, go ahead and try those European peer-to-peers. But regulation is not good with those Euro companies. So if you're investing through somebody that's based in Russia, what do you think is going to happen if one of those companies falls? In the UK, you're already seeing the issues with the administration problems that are occurring, and that's in a regulated environment. So if you're in a non-regulated environment, you may see a bigger capital loss. I've always had good experience with Mintos that I've been invested through. I've never had a bad situation or a bad occurrence with them. They've paid great returns, but that doesn't mean that I'm going to stay invested through them just because I've had good experiences. I do look at the landscape and past experiences of what's happened with these companies in the UK that folded and closed their doors. I'm looking, capital preservation again is everything. If I can't get the capital back, then what is 10% interest, right? If you lose £1,000 of capital and you've gotten £300 of interest over a year or over 2 years, the interest means nothing. So capital preservation is really what you should be looking at. How about, apart from loan pattern number 1, can you let us know into the secret of your current top 5? Annabelle, the secret is, there really is no secret. It's more about past experiences, looking at their abilities to sustain now through this financial crisis would be something that would go into my top 5, and lending rates, what they're paying investors and what they're charging borrowers, the spreads, things like that. By the way, if you want to look at my latest top 5, you can go to financialthing.com. I'm going to type it in the chat here. And feel free to bookmark this, because I do change the top 5 sometimes, and you want to keep access to it. There you go, financialthing.com/success. That's where the top 5 is. Yes, asked, do you think peer-to-peer companies are likely to reduce the amount they charge to new customers in order to sustain their business? Yeah, Absolutely. You're going to see some of the peer-to-peer companies reducing their fees, possibly their management fees, their fees that they're going to charge to new customers. So yeah, you'll absolutely see those adjustments that's happening now. What do I make of British business investments? £15 million funding to assets capital. I think it's a positive thing, Neil. Anytime you have money being invested into a company, it's a good thing. But also, Funding Circle had money invested. I can't remember the exact terms of what it was. It was a while ago into their line. I think it was 10 million. So that necessarily didn't make a big difference to them. If that is any way government connected, not sure. The government's got money to throw around, so does it make a big difference? It's nice to see it. Does it make a big difference to their business long term? Probably not, but it's always nice to get that injection. And it does show some commitment that they do believe in opinion. Not financial advice. Please hit the thumbs up button if you already haven't hit that. I'd appreciate it because it helps with my YouTube algorithms, and I'm just a poor boy from a poor family, so YouTube does help me out a little bit. That was some Queen lyrics, by the way. I'm sure you knew that. So let's see, any other questions, put them in the chat. Let me just explain a little bit about what's going on with why do I think that index trackers are absolutely the way to go? By the way, if you have a retirement account, what I recommend is just not checking your balance for the next X amount of months, because you don't want to go onto an emotional high of looking at your account going, oh, is this going to drop another 10 or 15 or 20%? That's what people do when they see that their accounts are in the negative and falling. They tend to make emotional decisions to sell. So I recommend staying the course, really leaving your investments as is. Anytime you lose money is where you sell. Again, stock prices will recover. Hopefully some of the travel industry can recover. If you have a lot of shares in oil or the airlines, I think eventually they will recover. Now, as far as index funds versus managed funds, why do I like index funds? Here's a great example, Neil Woodford. That's all I need to say for those that love managed unit trusts or managed mutual funds, as they're called in the USA. These fund managers, they get it wrong. They do. And Woodford was a perfect example of that. The golden child of managed unit trust investing. He gets it wrong and people suffer. I don't like having my money in the hands of people that are purported to be experts at trading and picking out stocks, because they get it wrong. I've seen it time and time again. I love passive funds because of that. They're low fees. They have low tax because they don't churn their stocks like managed funds do. Well, what happens with managed unit trusts is, let's say they have 100 held stocks. What they tend to do is churn. They trade all the time. They're trading. And some of the managed mutual fund companies are churning their entire portfolios by 100% over a year. What happens if they make gains is the fund has to pay capital gains tax on those profits, and who pays for that? You as an investor do. Also, these hedge fund managers, mutual fund managers have big salaries, sometimes in the millions. Some of the hedge funds, as I explained earlier, in the billions. And who pays for that? You do as an investor. You're also paying management fees on top. So if you do a comparison between, say, an index tracker and probably what your managed funds have been doing, you might see a very close correlation, or even some low losses on your mutual funds compared to the indexes. I mentioned before, Bloomberg wrote an article yesterday about how the top 5 US hedge fund managers who were paid over $1 billion in salaries, only 2 of them outperformed the S&P for the year, and the other 3 were an average of 10% lower than the S&P 500 or more. So those geniuses unable to get it right with the stock picking, and that's why I don't trust them. I just let them. I put my money in index funds, let the markets do what they're going to do, because stock pickers very rarely can do it correctly long term. They might get it right one year, chances are they'll get it wrong the next. No real advantage to using managed unit trusts or hedge funds. Martin, slightly worrying. Yeah, I know. It's a worrying time we're in right now, but hang in there. We'll all be okay and go. Maybe go and shower and wipe your bum. Might be a little bit too much information there, Martin, but thank you. Ian, what about funds like Vanguard Life Strategy? Yeah, they're not bad. I mean, I like it because it's passive, low fee. Love Vanguard strategy of low fee. I personally don't like the FTSE. I've never been a big fan of the FTSE. Hold on one second. Yeah, I mean, FTSE tends to mirror the US markets. And the problem with the FTSE is it's very small. You've only got a small amount of companies, and then at the top you have these heavy weighted ratio of the three biggest companies in the FTSE make up a high percent of. So if you got, for instance, Shell, BP, and another company that make up the top three companies in the FTSE, they can weigh up to 20 to 25% of the FTSE. So if those three companies struggle, you see the FTSE take massive hits. And there's just not enough companies in the FTSE to make it a diversified place to invest. That's why I like the US index equity broad market trackers, because they track the Dow, they track the NASDAQ, they track the S&P. And they have several thousand companies inside of those indexes. So I just prefer the diversification. But I don't think the life strategies are a bad way to go. If I wasn't doing the straight up index trackers, I'd probably look at the life strategy funds as a second buy. Sniffles, yep, it is a good time to buy in, but I wouldn't buy in yet. Vanguard, a very good lowest fees around as far as I know. Yes, if you live in the US, the only lower fee than that is the Fidelity Zero, which has absolutely zero fees, but Vanguard's 0.25% for management and the platform fees. Basil, do you think rate setters provision fund is sufficient? How will it be built for future losses? It's sufficient if the economic crisis is not long. It drags on for a long time, it will probably get hit. If it's economic crisis is short time, it will be completely fine. I don't expect it would be in trouble even, say for the next 6 months, but we'll see. You're welcome. Have a good dinner. Hopefully you have some fish and chips tonight, 7-Eleven. Your data and financial thing on Dow Jones before and after crashes presumably doesn't take account of index recomposition from firms that go bust in the crash. Doesn't this give a positive bias to the index? Yeah, Andy, you're right. It does, but that data will change obviously when this financial thing passes through. So obviously all of the data. All of the data is going to change, and it does put a positive bias to the index if you were looking at the numbers 4 weeks ago. But what you're going to see is the mutual managed funds anyways are going to have just as much as a negative impact as the index trackers are, unless some of the funds were able to totally go to cash before this happened. I don't think anybody would have been able to liquidate that quickly, but some of them maybe did, but likely they took a hit too. Check out your Invesco funds or your maybe Smith funds and see how they're doing right now. On a lighter note, Annabelle asks, have you invested in a mask and some vitamin and enhanced food for your cute little dog? He could be your only companion for the next few months. That is true. And she is actually a her. She's here, and she does have food. By the way, if you are a pet owner and you care about your pet's health, I'm pretty into holistic food for dogs, and I use this supplement called Diatomaceous Earth. I will type that in. I probably don't spell it correctly. Diatomaceous earth. But it's great for dogs. It's crustaceans from the bottom of riverbeds, and it destroys any parasites that dogs have inside of them. It's also good if you spread it on their back. It's a powder. It's good for fleas, and you can also eat it, but make sure you get food grade because you don't want to give your dog non-food grade. But yeah, it's got a lot of vitamins in it for dogs and also humans. So I take a spoonful of that every day, and the dog gets it on her food. John, any particular sectors you would now favor for new tracker investments in a few months' time or sooner? Okay, so I'm not a gambler when it comes to sectors. Obviously, healthcare, transportation is probably going to do well. Amazon. You know, if I was picking out stocks right now, I wasn't doing trackers, I was just purely gambling, I'd probably be investing in Apple. Amazon. If I was gambling, I'd probably get a little bit of Tesla stock just because it's so volatile. I'd probably have a stab at a couple of airline stocks because I think they will rebound. But again, I'm not a gambling guy. I don't buy individual stocks. But the dividend yields, you may see them take a hit. The only trackers I buy are U.S. equity index trackers because I think the U.S. economy long-term will be fine. We're also seeing a huge drop in the pound right now because people think the U.S. dollar is a safe haven. There's a reason for that. It's just been like that forever. So. I do not have a mask. No, probably should, but I am not really going out that much these days. So also, some of the health officials have said masks will only protect you if somebody sneezes in your face, or the biggest way that this stuff is being contracted is probably by touching your face. You touch a surface that has the virus on there and like that. See, I don't try not to touch my face right now. I'm doing that, but I think we all have a habit of just touching our faces. So sanitize. By the way, if you can't find hand sanitizer, it's really easy to make your own. You can get isopropyl alcohol, which is rubbing alcohol with aloe vera gel. There's recipes on the internet how to make your own bleach and hand sanitizer. There isn't any hand sanitizer here anyway, so there you go. Diatomaceous came up. Is this the one? Let's see if I can find you a link. Food grade. You can find diatomaceous earth on Amazon, I believe. Very healthy for you. This is not designed to be a health stream, but if you look at that, you can find food grade diatomaceous earth. I have heard, by the way, if you do get the coronavirus, that dry fasting for 2 days will completely clear it. Well, not completely, but for the most part. Don't know if that's verified, but I have a couple of holistic friends that really study this, and they say it starves out the virus, but dry fasting is no food, no water, so it's difficult. But, you know, give it a try, I guess. Hopefully none of you will get the coronavirus. John says, I was thinking about index trackers rather than specific stocks. John, I don't buy any other index trackers aside of what I've always bought because they've always been what I believe in. You could get an index tracker that would track REITs, like real estate investment trusts. You could get a tracker which tracks the healthcare. You know, it's just risky. I don't like specific sectors. I just don't have the patience or the risk tolerance to be knowing when is the right time to buy and sell. So I just buy one tracker and that's it. But I think healthcare, you know, the problem with healthcare is that it could do well. It could also get hit by shortages, and these companies can't keep up with the shortages that are occurring. And let's say, for example, you're a ventilator company, and ventilators are extremely in short supply right now, and you make thousands of ventilators, and then this virus disappears, like some of the other viruses that have come and gone, and now you have this big inventory of ventilators that you can't sell, then your company could suffer financially. So I do think it is risky. The guy who bought 18,000 bottles of hand sanitizer in the US, trying to price gouge them and then got shut down, wasn't able to sell them. See, there are some risks that come along with these huge booms in needed products. So again, I don't have the stomach for trying to pick out these indexes that I think are going to do well. I buy the entire broad market, NASDAQ, Dow, and the S&P 500. In the USA, it is called the VTSAX, and in the UK, Vanguard's US Equity Index Tracker. And then the Global Bond Tracker in the UK is what I buy. Dry fasting, Martin, it's a complete fasting from food and water for 24 to 48 hours. So dry means no food, no water. That's it. You can Google it. So yeah, that's pretty much about it. I don't think the sky is falling yet. I will be doing another stream probably in a week. If I have any other information about companies that I think are going to be suffering, I will post it or send out an email. Please join my mailing list on financialthing.com. That's where I send out notifications about upcoming streams, and also if I do hear anything, I do send out emails, but I don't send out a lot of emails. You won't get a lot, but you will get a few here and there. And join up the email list. And let me see, I'm gonna go on for a couple more minutes and then log off of here. Is it possible for a property to be loaned out to more than one peer-to-peer company? Yes, it is. If fraud occurs, there has been some cases of loan fraud, highly unlikely, but there's been fraud in paperwork that has occurred, unfortunately. Happens to banks too. Usually due diligence will spot it, but there is occasionally where it will fall through the cracks, but it is very unlikely, McTavish, that happens. Martin said that just might be the most important bit of information you gave any of us. So grateful for that. Yeah, dry fasting. There are some people that say dry fasting will cure a lot of illness. I don't want any of you having any major health problems because of something that I have said on here. But I am a pretty holistic person, not a meat eater. I do try to keep up on trends with health. Another quick tip too, deodorant. Don't use those that have the aluminum in them. I use a product called Milk of Magnesia, which is actually what you usually take if you're constipated. But I put it in a spray bowl and spray under the arms. It will keep you odor-free. It's natural. Won't clog up your armpits with aluminum, and will hopefully stop you from getting Alzheimer's. So there you go. Quick health tip for you. That again is Milk of Magnesia for deodorant. I probably didn't spell that right, but there you go. Anyways, guys, thank you again. Please hit the thumbs up button. Subscribe to my channel too. It's very helpful for me if you can do that. And I hope the information that I've given you is valuable. If you have any questions, please feel free to drop me an email. I do respond to emails personally if you have questions about or concerns about the companies you're invested through. And be safe, most of all. Live in gratitude. I mean, this is a time, right, to be spending with family and friends. And be healthy. Money at the end of the day comes and goes, and the most important thing we have is our health. If we're not healthy, money means nothing. Yeah, so Bitcoin. Sniffles, come on now. Bitcoin, yes. If you want to gamble, get some Bitcoin. But what is the Bitcoin price today? I haven't seen it. That'd be interesting to see. Is it high? I think I bought, like $6,000 US. I bought some Bitcoin when it was $19,000, which I still own, and I did look at it when it was $2. So back when I was writing a book with a gambler friend of mine who told me to look at Bitcoin when it was $2, I ignored it, lost out, but that's the gamble. I do not gamble on Bitcoin. I bought a little bit just to hang on to it for 20 years to see what was happening because I was interested in the technology. I think blockchain has a place, but people still don't understand how to use it. But anyway, I'm going to go, and greetings. Be safe, everybody. I love you guys. Thank you for coming to the live stream, and we'll do another one next week. And I hope it was helpful. I'll see you guys another time.